Good evening, everybody. My presentation isn't going to take 20 minutes, so we can all go and get a bit an early night. So about 3 weeks ago, I was asked by some quite influential people to come and chair NQ Minerals. It sort of brought me out of retirement. I don't do much mining these days, but I know the Tasmanian landscape in Australia pretty well. And the last time I was asked to come in and run a company that actually made money was back in 1990 when I ran the Emperor Mines in Fiji, and it was market capped at number 47 on the Australian Stock Exchange. And I saw some huge potential in this. And you know, speaking to fund managers around the world, there's two things you don't invest in: tailings dams and alluvials. And what's this? A tailings dam. But to me, this is the first of a three-phase expansion into making the flagship Hellyer project into something quite big for many decades to come. So the whole focus of the company is really about production. Right now it's lead, zinc, gold and silver. Just a bit of history on Hellyer. Aberfoyle found Hellyer in the 80s and spent a lot of money opening up Hellyer. It was a $500 million project back in those days. And it was one of the richest lead zinc mines in the whole of the Australian area. It was typically a 20% lead zinc mine. I mean, it's bonanza grade stuff. So they mined 12 million tonnes. And the last mining was in 2008. A group came in and reopened the Hellyer mine. They were processing, I think they did about 1.5 million tonnes at very good grade. You had the commodity crisis in 2008 and it shut down again. So you're sitting there with a huge tailings dam with a 10-year life on reserves. It's got very robust gas sales, and those sales are increasing. I'll go through that shortly. We have offtake partners that buy our concentrates every 2 weeks. From the shed, and production's getting better, and I see a bigger story here. But the key focus for the company is all about strategic entry into the complementary EV and energy storage sector. So right now we're doing lead, zinc, gold and silver. Without that you can't have the EV business, and the plan is to develop into nickel, copper, cobalt over the course of the next 2-3 years, all around the Hellyer plant, a bit like the oil and gas strategy of a hub and spoke. Unless you've got that hub, you can't create the spokes. So a bit of history on NQ. All of this presentation's on the website, so I'm not going to go into too much detail. But NQ listed on NEX. Okay, so that's the first big problem you've got as an investor, is the whole concept of NEX. And I know NEX very well. And frankly, most of NEX stocks suck because you can't get in and you can't get out. But things are changing quite rapidly. But the interesting reason why the Hellyer mine went into this NQ mineral structure is that NEX allows you to buy something bigger than yourself without doing a reverse. If you're on AIM or the LSE, you try and buy something bigger than yourself. It's a huge prospectus concept and huge dilution, etc., etc. So they listed on NEX. A year ago, they refurbished the plant and started it back up again. So the Hellyer operation has been running now for just a bit over a year. It didn't go profitable until July, and profitability is getting bigger and bigger. And the plan is production increase. We've got 10-year mine life, and then in a couple of years' time, we start up the Barnes Hill nickel cobalt project. There it is, it's real. What I like about this, we haven't even touched the gold and the silver reserves yet. All the revenue is coming from the lead and the zinc. So there's a 12.1 million tonne tailings dam. So I would be happy if I was a gold miner just mining those gold and silver grades, forgetting about everything else. But at the moment we're not touching that. The whole revenue is coming from the lead and the zinc. So 12.1 million tonnes, the resources are 9.25. There's another 3 million tonnes to bring in, which can be done within months into the reserves. You've got a dredge in the lake, which does about 110 tonnes an hour. We announced yesterday that we've just brought in the second piece of mining kit, which will allow us to double production. Production's currently running at about 1 million tonnes a year. So we have capacity to go up to the plant capacity of 1.6 million tonnes. Goes through the whole processing plant. This is the froth flotation with the zinc. This is the lead circuit here. 70% of our revenue comes from lead. It goes through the concentrate sheds, it gets trucked to Burnie, and we get ships take it from Burnie to the world markets. Now, unfortunately, because we're in basement level, I can't play this video, but it's on the website. It's 3 minutes long. If you get an opportunity, the video tells you everything about Hellyer from the beginning to the end. And it's a very interesting video. So if you get some time and you're interested in what NQ's doing, click on the website and have a look. But it's not one of these half-hour videos you're going to get bored at. This is what I like. So Q1 this year, it really sort of started to get into production. That's quarterly revenue, gross profit, net operating profit. Second quarter to 30th of June, third quarter to the end of September. And in the last couple of announcements, we've announced that the mine is now running at record productions of revenue and record productions of P&L. So we're already into December. So I would comfortably predict that revenue is going to be up here, and profit last month in November, we ran at 2.55 million from nearly $6 million worth of revenue. Now, to put it into simple layman's terms, the froth flotation from the lead side is about 70% of our revenue. So we're doing about 120 tonnes a day of lead concentrate. So right now that plant today, right now, is running at about $200,000 a day of revenue and around about $80,000 a day of net cash. That includes G&A, exploration, power, council rates, the whole lot. That's proper. If you're a mum and dad and you've got a budget at home, that's what you've got left to take the kids to the movie type money, right? It's proper nuts and bolts cash accounting. Now, that's $200,000 a day for 12 years. That's based on reserves. That's $80,000 a day net cash for 12 years. And NQ Minerals has a market cap today of 23 million pounds. I'll tell you why in a minute, right? Now, at the moment, we're running at 1 million tonnes a year. In January, we up production. January straight February, we up it to about 1.2 million tonnes a year. The thing that's changed from the profitability perspective is what's happening with our lead recoveries. Originally, the feasibility study said we would end up with, 35% lead recovery from a head grade of about 3% lead. We're now up to 45, and that's in October. November, we're into 50s, and I can tell you right now that we're into the 60%. That all goes to the top line and the bottom line. So if you look at where we started, our lead recoveries are up about 20%. And zinc, we were budgeting at 30%, and zinc we're now at 50%. And there's still more room to optimise that. Production of lead concentrate, that's October. November was up here, and zinc was up here. And that's up again in December. So the whole concept is we've got Hellyer, which is a hub and spoke. Now that plant, if you built it today, would cost you about $500 million. The company has debt of $90 million. They've done it in a funny way. They've left the capital structure alone at the top, so it's got 323 million shares. They've funded everything down the bottom. So it's got 91 million thereabouts worth of debt, paying it around about 12.5% coupon. every mine in the world has debt, but to go and restart this operation for $90 million on a $500 million asset with a 10-12-year mine life is cheap. Now, when I joined the board a couple of weeks ago, we made a statement, we've got to be a bit careful how we say it, is that we're working with our bankers and financiers to refinance the debt because the risk has now gone out of the project to a large degree. So over the course of the next couple of months, we would like to refinance all that debt through the big banks in New York, bring the coupon rate down, and then that goes even more to the top and bottom line. So Hellyer is a big project going forward. It gives us good cash flow. And this is the exciting bit that I find. Right now, if you look at all the gold and silver reserves within the Hellyer project, forget about tailings dam, just call it the mine. It's just cheap mining because it's about $2 a tonne to dig it up with the dredge. We're only getting 8% payables on our gold and silver. What the plan is some 80 kilometres away, is to open up the Barnes Hill nickel laterite project. Nickel, cobalt, copper, and use the gold that sits in the pyrites, which we also export to Asia, and we only get about sort of $35, $40 a tonne for the pyrites. That contains a lot of gold and silver in it. So roast the pyrites, create cheap sulfuric acid near site. That enables us to get 80 to 90% of our gold out. I'll go into the economics of that in a minute. But by doing that, we increase our suite of metals. We get more lead and zinc concentrate, sulfuric acid, gold and silver doré, iron ore, and nickel and cobalt. That starts ticking all the boxes for the whole EV market. So without mines like Hellyer and Barnes Hill, you don't have an EV market. You need these things to do all the green energy. So it's one of those nasty things in life. You need it. So that's Hellyer there. This is the northern part of Tasmania, and Tasmania is a very small island. Barnes Hill sits here. Bell Bay Port is where they bring the big Cape-sized ships in. So all of the product from Hellyer goes out through the Burnie port, and the plan is to build a big, big roasting facility here at Bell Bay, so we can import high-grade nickel laterites from Southeast Asia, from the Pacific, from Australia, process it here, and also become a nickel, copper, cobalt producer. We've just announced the upgrade in the resource, so they've now got 14 million tonnes drilled up to JORC here at Barnes Hill. It's all boring numbers, it's all available on the website. And the plan is, and the pre-feasibility study should be complete within the next few months, is to produce 5,200 tonnes of nickel, 200,000 tonnes of high-grade iron ore fines. We recover from Hellyer, which we're not recovering from the moment, 22,500 ounces of gold, 500,000 ounces of silver, and then we also produce additional zinc and copper production. That program will make this one of the cheapest nickel cost producers in the world. I won't give you the budget numbers until the PFS is out, but we reckon the only cheaper one than this will be Norilsk in Russia, which actually has minus costs, because we're getting out all this gold and silver as a credit. That's all boring geology stuff. I'm a mining engineer, it's all to say. If you want to have a look at it, it's on the website. But it outcrops at surface. It's cheap mining. Infrastructure. This is Bell Bay. There's some of the big, huge BHP Rio Tinto smelters here. They use cheap power from Tasmania, good labour, and a lot of product comes in from around the world to be processed here and then sent back out to the world. There's the bunch of scallywags who run this thing. What excites me is this. So this is Hellyer, right there. Rosebery is huge. It's been going for 100 years. Zinc, lead, same sort of thing. This is really, really big resource stuff. there's been very little exploration done around Hellyer, and on review of the underground plans and open pit potential of Hellyer, and this is where I see the real growth, there are drill holes that were drilled in the mid-Nordic, 2010, 2013 era that are off the clock bonanza grades. The sort of grades that Broken Hill, which started BHP, were getting when they found Broken Hill. We're talking untested zones of 25-ish metres at 14, 15% zinc, 10% lead. This is a 20% plus. This is bonanza world grade. Hellyer itself was a bonanza world grade project. There is so much potential here to reopen Hellyer with the cash flow that we're getting from the tailings operations that we as a company would like to look at how quickly we can reopen Hellyer as an underground open pit mining operation. I can't give you reserve resource numbers. We do have them. Give us a couple of weeks to tidy up corporately what we're trying to do in the area. But the plan is over the course of the next 3 to 4 months is to have a very, very large land position here, which enables us to use to the full capacity a 1.6 million tonne fully integrated, fully operational plant treating not only tailings but phenomenal grades within the area. So NEX, let's just talk about NEX for a minute. I've been on NEX for a while in a number of companies. Very painful, but we do get liquidity. A lot of our buying that I notice in the NEX market on NQ is really coming in from overseas. So if most people here trade AIM, London. I've traded both. I've run companies on both. But this is a very interesting story. So NEX is developing more of a platform. You've now got 3 brokers that traded online. You've got Share Centre, you've got Jarvis, and now you've got Barclays. Most brokers will take the order over the phone. Whether they screw you on commissions or whatever, that depends on your relationship. But NEX is starting to generate some activity. The plan for this company, and I'm not going to dish NEX because without NEX this deal wouldn't have happened. When we restructure the company debt book and make it very simple for people to understand, the company will move to a Tier 1 exchange. Now, where that Tier 1 exchange is still to be determined. Tier 1 to me is not AIM. Tier 1 is one of the senior exchanges around the world. This is a project that in my view will be going for decades, not the 10, 12 years of $200,000 a day in turnover. All that is the leapfrog into going back into open pit and underground mining at Hellyer and also going into things like Barn Hill with respect to nickel, copper, cobalt. So I see the opportunity as the fact it is NEX right now. If we were AIM or LSE, we wouldn't have a market cap 23 million pounds. When I came in, the market cap was 6, and all my banking mates in New York go, "What's wrong? You got a market cap of 6. I've looked at your website. You got a $500 million replacement cost plant. You've spent $90 million starting it up. You're now making $2.5 million a month in November. How come your market cap's 6? There must be something wrong." So they brought me in as chairman to help reorganise the company, help reorganise the structure, and start telling the message. I'm going to finish 2 minutes early. Questions?
David, thank you very much. Your question, please raise your hand and wait for the microphone. Anybody?
See, no one's interested in NEX.
Deathly silence. Here we are. Gentleman at the back, please.
Hello, sir. Haven't seen you for a while.
I'd be interested in knowing a bit more about the debt that your company has got and whether sorting it out is going to mean the shares become hugely diluted.
No, there's no dilution. Right, so at the moment there's 7 different type of debt providers within the $90 million. So there's conventional debt, there's a listed AA series bond, and the whole idea is just to wrap the whole lot up, which is averaging 12.8% coupon, under a much lower coupon regime, and pay them out. And now I've got debt one debt provider, or maybe syndicated out, but with big global banks, and say, right, here's your interest principal payments every month. We make plenty of money to service that, but none of that involves any equity whatsoever. It's like getting a mortgage on your house. So there is no equity component on anything we're talking about with respect to debt restructuring. Zero.
David, might there be any early repayment charges or penalties?
None. No, we can pay out the vanilla debt, which expires in 2022. We can pay that out at any time. And the bonds we have at the company's election can pay out all the bonds in February with no penalties.
And also on Next, as you brought it up, did they sell the business? Did Next get sold within the last year?
Well, no, they're
or
in
so?
the process of. When I spoke to the Next regulations team a little while ago, they said that the potential buyer is going through the process with the FCA. So that's still in process.
I remember I was reading, was it Oliver Helmsley was linked, wasn't he? And
yeah, no, that all fell over.
That's all gone.
I won't tell you why, but that fell over. And now there's a new potential buyer who basically specialises in European equities. That's exciting. I'm particularly interested in the concept that the new potential buyer wants to ban short selling. I don't know how he's going to do it, but I mean, short selling is one of my biggest bugbears. But anyway.
Any other questions for David, please? Gentleman here, thank you.
With such attractive mineral reserves, what are the prospects of a takeover of your company?
Very high. I'm not going to say any more. I mean, the sad part about this is there's been 2 years of blood, sweat and tears to go and turn this thing into profitable and really sort of kick ass on the metallurgy and the recoveries. And now that things are going well, the phone won't stop. And, but you know, that's what these things are created for. And it's not just about the tailings. It's about the whole prospectivity of Hellyer and the fact that it's fully permitted, tailings dams are permitted, it's got a 2 million tonne a year mining permit and production permit and milling permit. That's gold in real big mineralised country. And you've got a very supportive Tasmanian government that is driving for employment in Tasmania, and they're very supportive of the mining industry.
I think my other main question, David, was about the recoveries you showed of lead and zinc, and them being so much higher than the estimates. Or how has that been achieved, and is that sustainable?
Well, it's interesting. They started up with the ball mill, and ball mill through the floats, regrind mills, and they were ending up with 35-40% recoveries. They worked out that by having the ball mill, which is this huge piece of kit, I don't know how much it costs these days, probably 50 million bucks. The ball mill was grinding the product so fine that the metal particles were starting to oxidise in the ball mill, and therefore they wouldn't float properly. So they turned the ball mill off, stopped the oxidisation, and the recovery went through the roof. So I'm sitting there with probably 150 million bucks worth of kit turned off. But that kit's important because that's the crushing grinding section for when you go back into open pit or underground. And it works like a dream.
And at the moment, the excess capacity potential you've got, is there
600,000 tonnes, yeah.
Is there any third parties or anyone else locally you could be using that on a contract basis for?
No, I don't want to do that. No, there's so many complications in doing someone else's work, particularly with respect to accounting and profitability, what bit's yours, what's not. We've got so much. You see, the thing is, the plant's rate at 1.6. We're running at 1 million. In the next few months, the budget's to go to 1.2. We have all the dirt in the world to consider upping this to 1.4, 1.5, 1.6 million tonnes. Why do we want to give that profitability away?
Anyone else?
Are there any NQ shareholders here? On the basis that we're next, probably all the hands are gone down.
Anybody?
Have a look at it. Be brave.
David, thank you very much indeed. Thank you.